Hello everyone, welcome to another lovely episode from JayFx, JayForexHouse founder. And on today's episode, we're talking about marking support and resistance level. Okay, so on episode one, which I launched about a week ago, I dropped massive information about the general means of using support and resistance level. I gave you guys insight from line chart to trend line to also looking into candlestick formation. So on today's video, I'm going to show you how to properly mark support and resistance level. This is going into the mentorship in breakdown. On today's breakdown, we're looking into how to mark support and resistance level. On the next episode, which will be episode 3, we'll look into type of support and resistance level. And then we'll move on from there to episode 4, 5, 6, and 7. But for now, we're looking into how to mark support and resistance level. And if you look into episode 1, you understand that this support and resistance method is quite different from your regular traditional support and resistance. It's mostly used on gold, so I'll be using gold chart to break down the class for today. Permit me to use old price actions because we'll be looking at support and resistance level, how they form, and how you mark them. Currently, I'm on the daily chart, and this is a higher time frame method. So the lowest of the time frames I would go would be on our 1 hour chart. But on today's video, I'm just going to be showing you how to mark support and resistance level on the daily time frame. Okay. Now, like I said earlier, there are different types of support and resistance level, but you have to understand that support and resistance level are formed with the candlestick formation. Like I said earlier, support level can be formed by drawing out the, let's say, swing point of each range. So it all goes back to market structure. We understand market structure to be a formation of highs and lows. And then we expect price to test certain key levels as market structure forms. So these key levels are where we have turnovers, where we have key points. We have key formations around this area, key formations around this area, and key formations around this area. These are key levels, and each of these swing points will find a different formation as market structure continues to form. So we have something like this, and each key level has a significant key point with key support and resistance level. So once there's every breakout of a structure, there's a new level to be formed. So all we have to do is understand these key levels within price actions, within market structure, that we can expect areas of interest for. So this takes us to swing points. So swing points on structures would be important for us for checking out even bullish or bearish levels. So this is how to mark out support. And remember the A and V formation I gave in episode 1. So this would be a V, this would be a V, this would be a V. So these are swing points. These levels are swing points. Now, once you understand the swing points, you now have to understand the candlestick formation. I just showed you swing points. So we should mark out some swing points. We'll have this as a swing point. We'll have this as a swing point. We'll have this as a swing point. I'm not marking out market structure. I'm marking out swing areas that we can see on the chart. So these swing points are areas where market structure has formed. It's different from this. This is a different thing. This is not a swing point. This is like a break and retest. A break and retest. We'll go into that. Remember, I told you guys there are different types of support and resistance level. This is like a break of a resistance and a retest, but we use the candlestick formation to understand the price action. That's the difference between the traditional support and resistance and the new support and resistance. The traditional one would use the structure of this whole range to understand the break and retest, while the new one will use the candlestick formation to understand what is going on there. So now, once we have marked out our key levels, we want to understand on the line chart, how does this look? Okay, so we can see V, V, A, and then something similar to a double bottom here. But this would be a double retest. And that is something we'll have here. That would be the price action. Let me take that out. It's not really that plain. So we have four areas, two resistance, two supports. Now, using the candlestick formations, I told you we use two candlestick formation, the close and the open. And I told you guys something about the wick to the body. So we use the body close, not the wick. The body close of the last buy before the sell would mark out our key level using support and resistance. So we just marked out the support level over here and the resistance level over here. Price tested this one, creating a liquidity here, an internal range low. I told you this is something I mixed with smart money concept. So then price came back down after testing this resistance and then gave a retest to this, support level. The same price action was repeated around here. And then we have this as marking out support and resistance level. Now, using trend line is a different case. So I'm not showing you how to use trend line. I'm just showing you how to mark support and resistance level. This is on a range. Let's use a different price action. This would be a resistance level. You can see the last buy before the sell, other block formation. This could be a demand zone. Remember, I still use smart money concept. So we just marked out a resistance level that was tested. We use it, and we can see the trend line formation, three touch over here. Using this, and we would have something like this. So we can have this as our entry point. Safe asset here. Mark out something like this. And we have this. So this is mixing support and resistance key concept with smart money concept. And this is what I do on my channel. I give you guys breakdown of using different methods with different methods without having any rules or restrictions. So on today's episode, we're just looking into how to draw support and resistance level. And I just showed you guys multiple examples. And then on the next episode, I'm going to be showing you different types of support and resistance level. Like what we have here, this is a support zone, but at the same time, it's formed at a different point. We have a rally, a base, and another rally. So this is shown as a rally, base, rally using supply and demand. And then now on this point, we see a break of this A, if we use line chart, break and retest forming a V. So this is a different type of support and resistance points because we still see the clear area of interest here. You can see the liquidity getting cleared out over here. But at the same time, if we use the line chart, you can see the trend line formation here with this as the second touch. Okay. So using support and resistance is not really that difficult. You just have to understand what you're looking for and what you're looking at the moment. So you use multiple concepts combined with trend line and this support and resistance formation to be able to tell the anatomy of price action using candlesticks. So on this episode, I just draw out some most likely something not that easy for you. But if you try to practice and watch more episodes to come, you will understand more that this is a very easy method to use. You just have to understand the concept and the concept behind the concept you're trying to use. So thank you for watching, and this will be all for today's episode. I'll see you on the next episode. Bye.